Okay, I think we will begin. So, good morning. Today is Wednesday, February 4th. Wow, time is just flying by. All right. So, last time we were here, we were on page 6. We were about to talk about generally accepted auditing standards. There used to be a list of 10 generally accepted auditing standards. The AICPA Auditing Standards Board did away with the list as a list, but technically the standards are still in existence because they're scattered through other auditing pronouncements. So we'll talk about them. So you have to take some good notes at this point because they're not in the notes. Now, it turns out that standards represent the quality of work, and you're supposed to live up to the standards of quality. So you're supposed to live up to the standards. What you actually do in real life is called auditing procedures. Hopefully, the auditing procedures that you perform align with the generally accepted auditing standards. Hopefully, no guarantee though. So there is no list anymore of generally accepted auditing standards, but they're still relevant today. So let's talk about them. So you got to write this information down. So it turns out that there were three categories of generally accepted auditing standards. I'll put it in the chat bubble. We had general standards. Let me put it in caps. I'm typing. General standards. Still typing. General standards. Field work. Standards. On reporting standard. General standards, fieldwork standards, sometimes called standards of fieldwork, and reporting standards, sometimes called standards of reporting. Three categories. There were three general standards. There were three fieldwork standards. So how many reporting standards were there? If there were 10 altogether, 10 minus 3 minus another 3 is how many left for reporting standards? See if you could do the math quickly. Come on, come on. You're going to be an accountant. 4, exactly. Thank you, Zara, for responding. So let's talk about the general standards. The first general standard stated that in order to perform an audit, you have to have technical training and proficiency in, take a guess, the big A. It's not apple picking. Verbal responses would
Counting.
verbal responses would be greatly appreciated. So Ryan said
Counting.
something. Unfortunately, that would not be the answer, but it is an A word. I agree. Auditing. Right. So Bing Z got it right. Auditing. So to have adequate technical training and proficiency in auditing. You think you have that when you graduate from Queens College? No. Thank you, Danny. Now you know that as of today, in order to have your CPA license, you need 1 year experience, but you need 150 credits. That'll change in November when the regulations are finalized. Do you think after 1 year you're technically trained and proficient in auditing? What do you think? 1 year?
No.
No. How about if you went with the 2 year requirement that'll kick in? We say not 2 year requirement, but a 2 year option. What's the answer to that question? Verbal answer, please.
Don't know.
I would still say no. So it takes years of experience to be technically trained and proficient in auditing. The more diversification of industries that you deal with, the more diversification of clientele that you deal with, the more technically trained and proficient you will be. Experience is what counts. The second general standard tells us that in order to perform an audit, you have to be independent in fact and independent in appearance. Independence in fact and independence in appearance. It's not that you could have one or the other. You have to have both independence in fact and independence in appearance. Independence in fact means that in reality, in fact, you are independent, meaning you have not entered into any situation that would tend to breach your unbiased mental attitude during an audit. So, what do you think? Let me give you some situations. You tell me if I've breached independence in fact. I audit a client of which I own 1% of their stock.
Yeah, you breached.
Eric says I breached my independence in fact. Yes, because you have a direct interest in that client. How about if I am performing services as an internal auditor? Am I independent of that client? Internal. I seek a response.
No.
No, I'm an insider. So I have breached my independence. I can't be independent of a client if I'm their internal auditor. So there'll be certain situations where you will breach or destroy your independence in fact. We'll get to more of those situations when we cover the code of professional conduct coming up. Probably not today, but probably on Monday. So you have to have independence in fact, but I also said you have to have independence in appearance. You have to look as though you are independent. So let me ask you this question. Would it be okay to have a hot love affair with the president of the company?
No.
No.
That would be a breach of
No.
independence in fact. But let's say that the two of you are walking down the street one day and you're holding hands. Now, you may be independent in fact, maybe, but you certainly lack independence in appearance. You'll see that if you're holding that person's hand because they have an ankle injury and you want to give them support, and there is no hot love affair going on, you have independence in fact, but the appearance is that you lack independence. Technically, you're supposed to have both, not one or the other. We clear on independence in fact and independence in appearance.
Yes.
Oh, good. The third general standard told us that in order to perform an audit, you have to exercise due professional care. Due care for short. Anybody remember that from business law? Due care. Do you care? What do you think? Does it ring a bell? Do care? Do professional care? Is that a no? Non-responsive. It's a duty of care, yes. So you have to do as another CPA would do in similar circumstances. Do care. Do what the average CPA would do. That's exercising due care. So the three general standards deal with technical training and proficiency in auditing. They deal with independence in fact and appearance. and they deal with due professional care. Any questions on those three? Realizing again, there is no list of 10 anymore, but if you think about it, wouldn't they still be relevant today? Sure, they would. And they would be relevant for an auditor of a non-public entity as well as a public entity. The second category we said were fieldwork standards, of which there were how many? Anybody remember? I know it's early.
I think three.
Three. Good answer. Three. The first fieldwork standard or standard of fieldwork told us that you have to properly plan the audit, and if assistants are utilized, they must be appropriately supervised. You have to properly plan the audit, and if assistants are utilized, they must be appropriately supervised. Did you all get that down, or you need me to repeat it one more time?
I'll repeat it one more time.
First, fieldwork standard or standard of fieldwork tells us that you have to properly plan the audit, and if assistants are utilized, they have to be appropriately supervised. Properly plan the audit, and if assistants are utilized, they must be appropriately supervised. We all have that down? Yes?
Yes.
Good. Now, you may remember from previous class that we said that in an audit, which is a systematic process, you have to develop an audit plan or program, a step-by-step approach. That's where the planning comes into effect. You have to properly plan the step-by-step approach, documented in an audit plan. And then told us that if assistants are utilized, they must be appropriately supervised. Well, that's a good thing. Somebody always has to watch out for the person below. Because while the cat is away, who will be playing? It's an old saying. While the cat is away, who will be playing? Give you a hint, Mickey and Minnie. The mice. Exactly. Zara, do you have a microphone? It's not working. Okay, I guess ATM is not automatic teller machine, but at the moment, I guess. Okay. So while the cat is away, the mice will be playing. Now, when you start out in accounting, since you have no experience, you will be considered a mouse. You have to be supervised by the cat, the boss. Eventually, you'll move up. You won't be a mouse anymore. You'll be a rat. Now, I know you people might feel insulted that I'm calling you rodents, but honestly, everybody has been or will be in that position. Everybody needs to be supervised. Assistants need to be supervised, which is a great thing when you start out in accounting and auditing because you're at the bottom of the totem pole. Somebody's got to be watching out and supervising you. So if something goes wrong, ultimately it's not your responsibility, it's the person right above you. So assistants must be supervised. The second fieldwork standard tells us that in every single audit, we must obtain a sufficient understanding of the entity and its environment, including its internal controls, in order to assess the risk of material misstatement, whether caused by error, fraud, or instances of noncompliance with laws and regulations, which puts us in a better position to determine the nature, extent, and timing of further audit procedures. Now, even though they did away with the 10 standards, that one is still in effect. It's just in a different spot in the codification of the auditing standards. Did you all write that down?
Can you repeat that?
Yeah. So I know you weren't able to write that fast. Even I can't write that fast. Let me just take a sip of the old caffeine. In every audit, you must. Just curious if it's a must, would that be an unconditional requirement or presumptively mandatory?
Presumptively mandatory.
If you must, what's the key word?
Must.
Must. Must implies what kind of requirement? Let me give you choices. A, unconditional requirement. B, unconditional requirement. C, unconditional requirement. D, unconditional requirement. E, any of the above. Can't really get it wrong.
Um,
What kind of requirement?
E.
E.
You want to go with E? I could live with E, but basically it's an unconditional requirement. Must means it's required. You have no choice. You must do it. So in every single audit, you must obtain a sufficient understanding of internal controls because you have to obtain a sufficient understanding of the entity. That means the business. Sufficient understanding of the entity and its environment. The environment might be the industry in which they're operating. That's background. So you must obtain a sufficient understanding of the entity and its environment, including its internal controls, which for now we know that internal controls like a system of checks and balances for the company. It's something good. We'll get into specifics later on in the semester. You must obtain a sufficient understanding of the entity and its environment, including its internal controls, in order to assess the risk of material misstatement. That means in order to assess the chance that there will be material misstatement in the financial statements. And we do that so that we could properly plan the audit. And determine the nature, meaning the type, extent, meaning how much, and timing, meaning when to perform further audit procedures. Said further audit procedures will be what we call substantive procedures. So you have to get that understanding of the entity and its environment, including its internal controls, so you can assess the risk or the chance of material misstatement. Material misstatement could be caused by error, which is accident, fraud, which is intentional, and non-compliance with laws and regulations, violations of law, which could be intentional or unintentional. So that we can assess the risk of material misstatement, so that it'll put us in a position to determine the nature, meaning the type, extent, meaning how much, and timing, meaning when to perform what we call further audit procedures, which will end up being substantive procedures. That's a whole separate discussion, but those are the procedures that give us the evidence to form our opinion. Any questions on that one?
No.
Is that a no?
Yes.
Good. The third fieldwork standard told us, and it's still relevant today, that we have to obtain sufficient appropriate audit evidence in order to afford us with a reasonable basis for our opinion. What kind of basis for our opinion? Let me hear it. Reasonable basis for our opinion. Right. So you have to obtain sufficient, which we'll see has to do with the quantity of the evidence. You have to have enough. Appropriate audit evidence. Appropriate means that it's relative or relating to assertions in the financial statements. And audit evidence is proof, support, You'll see what forms that can come in. Sufficient appropriate audit evidence regarding, we'll see assertions, statements of representations made by management. And if we have that sufficient appropriate audit evidence, we'll have a reasonable, we will not have an absolute basis, but we'll have a reasonable basis for expressing our opinion. Are we good on the third fieldwork standard?
Yes.
Now, again, they did away with the list of 10, but I mean, just common sense without reading into the literature, wouldn't you agree that they're still relevant? Sure they are. So that leaves us one category left. What's that category called?
Reporting standard.
Good, Eric. Reporting standards or standards of reporting, of which there are four. Four. I will tell you that two of those standards turn out to be explicit in the audit report. Two of them turn out to be implicit in the audit report. What's the difference between explicit and implicit? Anybody? What's the difference between explicit and implicit? I don't know. It's Wednesday. I'm tired. I can't answer. What's going on here? You people frozen?
Professor, can you repeat the question again? I'm sorry.
Sure. What's the difference between explicit and implicit?
Isn't it explicit, like, how do you say, explained, and then implicit is, like, uh, like in a way of like implied or something?
Well, say it one more time.
So it's like explicit is explained, and then implicit is like, implied? Like, I don't know how to explain it.
Oh, did you
Like,
see the bubble that was put up by Zara? Zara says implicit is implied and explicit is stated directly.
yeah, like something like that.
Yeah, I like that answer. So if a standard is explicit, you'll see it in print in the report. It's there in black and white. You can visually see it. If a standard is implicit, well, it's not in writing. It's not there visually, but it's sort of implied that it's there. Everybody good on the difference between explicit and implicit? Come on, people, get involved here. Respond.
Yes.
Oh, there's one.
Yes.
There's two.
Yes.
There's three. So we got 33 people in attendance. Plus me is 34. 33. And most of the 33 are not responding. Now you may remember that I may give surprise quizzes. Remember that?
Yes.
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 Yeah. So if I don't get responses verbally to my questions, I might have to give a surprise quiz. And in that case, it won't be just a simple quiz that everybody passes because they're here. It's going to be designed to see if you're with me, you're paying attention. So try to get involved, please. Otherwise, I don't know about for you, but if for me, it would be boring, and I don't like to be bored teaching. All right, so we all going to respond. Let me hear yes.
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 My hearing has improved. Excellent. Okay. So, two of them are explicit, two of them are implicit. The first standard of reporting used to say, it's not a list anymore, but it's still relevant, that the audit report has to specifically
Sorry about that, Professor. I was
Problem.
stretching.
Okay. The audit report must specifically indicate the principles of accounting upon which the financial statements are predicated. So since the audit report must specifically state the principles of accounting, which is typically US GAAP, it will be in print. So is that first standard of reporting explicit or implicit in the audit report?
Explicit.
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 Good. So the principles of accounting have to be specifically stated. And of course, we don't just call it GAAP anymore, we call it US GAAP, like there is another set of GAAP. The second the second reporting standard tells us that the auditor, by means of the audit report, has to identify circumstances where there is a break in the consistent application of GAAP from one period to the next. Is there any reason, is there an important reason why financial statements should be consistent from one year to the next in terms of utilizing principles, practices, and methods of accounting? Why is consistency important?
There might be a change.
There might be a change, that is correct. So it's important to know if there is the consistent application of GAAP, because there might be a change. Should changes be noted in the financial
Yes.
statement and the
Yes.
audit report?
Yeah.
Yes.
Yes.
Now, under normal circumstances, will there be consistency in the application of US GAAP from one period to the next? Normally.
Yes.
And
Yes.
the reason they need to have consistency is for comparability purposes. If you change the principles, practices, and methods of accounting, one year you got apples, the next year you got oranges. And I vaguely remember in life that you can't mix apples and oranges. So we need to know if there was a change. Now, under normal circumstances, there will be no change. So consistency is normally not stated, but it's normally implied. So that second reporting standard is what? Implicit or explicit if you normally don't see any reference to it. Oh, is that you?
Implicit.
Implicit. Good. However, if there was a change in a principle, practice, or method, it needs to be disclosed, but that's not the normal circumstance. So normally, no reference to consistency, but it's sort of implied that it's there. The next, you had a question, Alex?
No, no question.
The next of the reporting standards tells us that informative disclosures, keyword disclosures, informative disclosures are presumed to be reasonably adequate in the financial statements unless otherwise indicated in the audit report. So under normal circumstances, there will be full disclosure, adequate in terms of disclosure, adequacy of disclosure. Disclosures will be informative and geared towards general readership. Shouldn't have to be a supersonically high-powered CPA to understand the information. So disclosures are presumed to be reasonably adequate unless otherwise indicated in the audit report. So there normally won't be any reference to disclosures because it's sort of implied that it's there. So would that standard be explicit or implicit?
Implicit.
Implicit.
Implicit, exactly. But if there was a change from one period to the next, or there was a lack of informative disclosures, it would be so indicated in the audit report, but normally no reference. And the fourth reporting standard tells us that at the end of the audit, what are you supposed to express? A, your political views. B, an opinion.
B.
B, an
B.
opinion as to the fairness of presentation of the financial statements in terms of their conformity with the applicable financial reporting framework, which is typically US GAAP. So at the end of the audit, you're supposed to express an opinion, but we said there may be circumstances where you're unable to express an opinion, but you still have to issue something in print. What is that something called when you state that you're unable to and you do not express an opinion?
Disclaimer of opinion.
Good answer, Nelson. A disclaimer of opinion. But given it one way or the other, you either express an opinion or a disclaimer, you're still putting something in print. So would that fourth reporting standard be explicit or implicit?
Explicit.
Explicit.
Explicit. Good, because it's in print. It's in black and white. So what do you think? Now that you know what the 10 generally accepted auditing standards are, and you know that the list has technically been eliminated, do you think they're still relevant?
Yes.
Yeah, they're still relevant. But for some reason, they did away with the list. It's fine, but they're still scattered through the auditing pronouncements. Next, responsibilities of management versus the independent auditor, meaning the CPA. Two groups, management and the auditors. We each have different responsibilities. So you need to know who's responsible for what. You see, under management, it says that management is responsible for setting up a chart of accounts. They're responsible for setting up all of the books and the records, including the journals and the ledgers. What's a chart of accounts? I forgot. Do you really think I forgot after 50 years of doing this? I don't want to lie. It's not 50 years. July will be 50 years. Hurts. The pain. 50 years. Could you imagine 50 years doing the same thing? Working in the same field for 50 years?
I mean, if you enjoy it, it would be great. 50 years.
Yeah. You think I enjoy it?
I think you like the money.
Yes.
I not only like the money, but I like what I'm doing. Yes. So July will be 50 years, and then I look forward to the next 50 years after that. Yeah, right. So what's a chart of accounts? I didn't forget what it is. What's a chart of accounts? Somebody help me out here. The list
Wouldn't it
of,
be like the general ledger?
okay, so Zara says it's a list of books and records, which unfortunately is not the right answer. Who gave me a verbal response?
Me.
So you said that a chart of accounts is what?
General ledger.
The general ledger. So instead of using the terminology chart of accounts, I could just say general ledger.
No, it includes general ledger.
Professor?
So are you telling me that an example of the chart of accounts is the general ledger?
Like it includes like the general ledger.
So the chart of accounts includes the general ledger. I'm not
It's a
100%.
list of
Yeah.
accounts that any business use to record like financial transactions. I use that on my job in a daily basis.
That's a good answer, and I think Alex put it in bubble too.
Yeah, it's a core components and structure, like your assets, liabilities,
Yeah.
revenues, etc.
Right. So it's a list of all the accounts that we would find in the general ledger. Set accounts are where transactions are posted to from the various journals. So who's responsible for setting up and maintaining a chart of accounts?
The bookkeeper.
The bookkeeper, so we'll say the company, which since we're drilling down, we'll say it's management's responsibility. Now, honestly, my clients are private entities. I pick up a new client. Do I ask them for the chart of accounts? Yeah, I'll ask them for the chart of accounts. And you know what they'll respond with? What are you talking about? What's a chart of accounts? But now you know what a chart of accounts is. And technically, management is responsible for setting that up. But of course, most likely the accountant's going to do it. But yes, the bookkeeper in the company could do that as well. Management is also responsible for the books and the records. The books could be the various journals. That's where transactions are initially recorded. That could be the cash receipts journal, it could be the cash disbursements journal, it could be the payroll journal, it could be the sales journal, purchase journal, general journal, adjusting journal. It could be any type of journal where transactions are initially recorded. Management is responsible for that. It's not our responsibility. Then we have two possibilities for the ledgers. First of all, who's responsible for setting up and maintaining the ledgers? Is it the CPA or is it management? Give you a hint. If you look at the top of page 7, you'll see it at the very top.
Management.
Management is not our responsibility. But we have two types of ledgers. The first one is called the general ledger. What's another type of ledger? Think. I'm thinking.
Is it like the subledgers?
Subledger. Yes, the word sub is short for, as Jing said, subsidiary ledger. Good. So the general ledger. What is the general ledger? Oh, I know. Somebody call on me.
It's to record all of the company's financial transactions, which usually the accountant or the bookkeeper does.
So are you telling me that the general ledger is where we actually post transactions to from the various journals? Is that what you're telling me, Karina?
Maybe.
Maybe?
Sounds about right.
Who said sounds about right?
Me and Gabriel.
Gabriel says sounds about right. I don't think it sounds about right. It is right. So the general ledger, which will probably have various what we call T accounts, something from Accounting 101. T accounts have names based on the chart of accounts. That's the place where you post, you transfer entries from the journals to this book, which summarizes the various accounts. So who's responsible for setting that up?
Management.
Management.
But in reality, who's really the one who's going to do it?
Accountant.
The accountant, right? Or the bookkeeper. Right. That's the general ledger. Now, I like that name. Doesn't it sound like it's sort of military in nature? General ledger here. Doesn't it sound military? Now,
Yes. Oh,
it does. I think it does. Now, you've known me for what, 2 weeks already, maybe? Do you think I like to have fun in accounting, or nah, I take it extremely seriously and no fun at all? What do you think?
you like to have fun?
I do like to have fun, yeah. So you know what I was thinking of doing one night? Because sometimes I have trouble falling asleep. I actually am lying to you. I never have trouble falling asleep. I put my head on that pillow, my baby Brown's clothes, and I drift into dreaming about debits and credits. But let's say I'm having trouble sleeping. What am I going to do? I'm going to sit there and twiddle my thumbs in bed. So I think I'll get on the phone and I'll start going through the phone book because I still have a copy of a phone book. And I'll look for the names of people that have the last name Ledger. There are people who have that last name, like Heath Ledger. I think he's not alive anymore. Uh, he was an actor, but that's his last name. Yes, rest in peace. I agree. So people have a last name of Ledger. So I was thinking of going through the phone book and calling people in the middle of the night, like 3 in the morning, and saying, I'm sorry to bother you, but I'm just curious. Is there anybody in your family who was in the military? If the answer is yes, I'll ask them what rank they rose to, and maybe I'll get lucky and somebody will say general, in which case I'll say, wow, you have a general ledger in the family. Neato. If I do that, I'm probably going to get in trouble. So I'll just block my phone number. The subsidiary ledger is what?
It's a detailed breakdown of the general ledger account.
Ooh, that's a good answer.
just give these to you, right?
Yeah, thank you.
So the subsidiary ledger gives the breakdown of the various general ledger accounts. So, for example, if there were accounts receivable in the general ledger, there'd be one amount, accounts receivable. You have no idea what it consists of. But if there's a subsidiary ledger, it gives the details or the breakdown, listing of the customers and their balances. That was a good answer, Karina. Great. Management is responsible for setting up the subsidiary ledger as well. Management is responsible for preparing the financial statements. Not us, management. So they're responsible for selecting the principles, practices, and methods of accounting which underlie the presentation of the financial statements. Management is responsible for setting up and maintaining effective internal controls. What are internal controls? Are internal controls good things or bad things?
I think it's a good thing.
Definitely a good thing if they have good internal control. And internal controls for today, we'll say, consist of policies and procedures that are good for the company. It's like a system of checks and balances. Management is responsible for setting it up and maintaining effective, meaning good, internal controls. Not our responsibility. Who is responsible for suggesting changes to internal control to make internal control more effective and efficient? Would that be the auditor or would that be people involved in management?
The people involved in management.
Good. People involved in management. Exactly. Now, if you're a non-issuer, you can definitely make suggestions to the client to improve their internal control. And if they put in those controls that you suggest, and then you perform the audit, you think about it, you basically would be auditing your work. But if it's a non-issuer, there's no problem doing that, according to the AICPA. So if you look at item E on the list, you're basically telling us, we're basically finding out that management is responsible for everything leading up to and including the preparation and the fairness of presentation of the financial statements. It's not our responsibility, it's management's responsibility. Who is responsible for safeguarding or protecting company assets?
Management.
Management, right? They got to have proper controls in there. So if they have petty cash, who's responsible for protecting, safeguarding the petty cash fund? Is it our job or is it management's job? It's management's job. It's not our responsibility. Of course not. And management is responsible for the reliability of the financial statements. They're responsible for the credibility of the financial statements. Well, if you want to summarize that section, you just say that again, management is responsible for everything leading up to and including the preparation of the financial statements and the fairness of their presentation. So what's our responsibility? Our responsibility is based on the primary purpose of an audit. What's the primary purpose of an audit?
Is to express an opinion as to the fairness of the financial statement presentation.
Good answer. The primary purpose of an audit is to express an opinion as to the fairness of presentation of the financial statements in terms of their conformity with the applicable financial reporting framework, which is typically US GAAP. So when we perform an audit, we want to get evidence that there are no material misstatements in the financial statements. If there are none, then we'll be able to express an unqualified opinion or an unmodified opinion. Turns out that the auditor must possess competence and have the ability, the capabilities to perform an audit, which we know means you have to have adequate technical training and proficiency in auditing, and we went through that already. CPA is responsible for complying with ethical requirements. Ethical requirements are based on code or codes of professional conduct, which we will talk about shortly. And we have to maintain professional skepticism. That's a big word, skepticism. You see that word in item 2D? Skepticism at the end, professional skepticism. Question. When we perform an audit, do you think we come in and presume that everything is stated fairly? That the client is completely honest and ethical? No. Do you think we presume that the client is completely dishonest, that they're liars, connivers, chiselers, swindlers, embezzlers, arsonists, rapists, child molesters, Scud missile launchers, and document shredders? Do you think we presume that?
No.
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 So you don't presume they're on this side, angels and saints, and you don't presume they're on the other side, liars, connivers, chisel swindlers, etc. You have to have what's called a questioning mind. You have to ask questions. That means you are skeptical. You have to exercise professional skepticism. Based on the results of the questions, when you get your evidence, you'll be able to determine where the client falls, either towards honesty or towards dishonesty. So you don't presume they're anywhere at that point at the beginning. You have to be skeptical. You questioning mind. And then it says you have to exercise professional judgment. Now, professional skepticism, just backing up a step, that's something you have to exercise throughout the entire audit. Not just in one area, but through the whole audit. And then it says to exercise professional judgment. Now, I like that phrase, professional judgment. So I typically, if I'm going to say something about professional judgment, I'll put it in quote marks. So what do I want you to yell out whenever I go like this?
Professional judgment.
Good answer, professional judgment. Notice the spelling of the word judgment. There is no E after the G, although technically, if you put the E, that would be acceptable in the English language, but most people leave off the E, so Judgment, professional judgment. What is professional judgment? And why am I picking on that? Because professional judgment is what guides us through the conduct of the entire audit. You have to exercise professional judgment. Your judgment could be completely different from my judgment. Does that mean that I'm right and you're wrong? What do you think? Be careful, didn't put your grades in yet. What do you think?
I think it depends if you have backup to what you're stating.
So if I exercised good professional judgment and I came up with conclusions, it would mean that I have obtained evidence to support my conclusions. Is that what you're saying, Karina?
Yes.
I would agree. So you have to exercise professional judgment throughout the entire audit. So the conclusions that you reach have to be supported, and that would be based on professional judgment. Exactly. Very important phrase. Actually, two important phrases: professional skepticism and professional judgment. And then you see there are a couple of true-false questions, but you could review those on your own. All right, we good? Now,
Yes.
right above the section where it says exercising due professional care, there's a little blurb about the PCAOB and the SASs. SASs, I think we've already established, come from the AICPA and they're applicable to non-issuers. Standards in auditing for issuers come from the PCAOB. Bottom of the page, it says exercising due professional care. Yeah, we've spoken about that. You have to exercise due professional care. Do as another CPA would do in similar circumstances. All right, we're on page 8. Next, we have system of quality management. There used to be something called quality controls. They changed it. Relatively new is the system of quality management. But the bottom line is, it's basically similar. I wouldn't say identical, but it's very similar. Now, it turns out that every CPA firm, I don't care how big or small you are, you have to have a system of quality management in place, and it has to be working effectively if and only if you perform certain services. What's the granddaddy of them all in terms of a service in connection with financial statements? The highest level of service we can perform.
Audit.
An audit. So if you do one audit, guess what you have to have in place? A system of quality management. If you perform no audits, but you perform accounting and review services, remember those were two levels of service below an audit? You have to have quality management policies and procedures in effect, and they have to be effective. So if you don't do those services, but you do attestation engagements, which I think I may have mentioned very briefly, but an attestation engagement might be like an audit, might be if it's the highest level of attestation engagement. It's called an examination. But if you perform attestation work, guess what you have to have in place? System of quality management. If all you do is consulting services, you do not have to have quality management policies and procedures in effect. Do you think it would be a good idea to have them? Yes, but you don't have to because there's no requirement for that level of service. If all you do is tax work, you prepare tax returns or you do tax planning, you do not have to have quality management in place. If you do business valuation services only, you do not need to have quality management in effect. You think that's a good area to go into, business valuation? What do you think? In other words, somebody wants to sell a business and they're going to find a buyer for the business, and the business has to be valued properly so that a willing buyer would take over the entity. Is that a good service to perform, business valuation? Yeah. I mean, if you're talking about acquisitions, purchases, it
Yes.
could be an outright acquisition or it could be a merger. Yeah, before you engage in a merger or an acquisition, I think you'd want to know whether the business is valued properly. So that's a good field to go into. I knew somebody who did business valuations. I had a client that called me up once and said, I can't stand my partner. I want to get rid of the partner. Now, if we were watching The Sopranos and they said they want to get rid of somebody, the way they would get rid of the person is different than we would talk about in accounting. So I said, well, you can actually buy the other person's stock. This way you get rid of that person. Response was, well, I don't have that kind of money. I said, well, then you can have the business buy back that person's stock. That would be what's called treasury stock. So spoke to his partner. He says, well, I need to have the business valued. So I was referred to somebody who did business valuation only. The person did a terrible job. Terrible. When I looked at the report had a lot of details, but it was taken from what we call boilerplate, standard wording that this person used for another business valuation. They didn't even change the name of the client, the entity, which I thought was pathetic. And I told my client, this is a piece of garbage. So the client decided not to pay it, pay the invoice for it. Would you say we live in a small world, or it's a big world? You'll never run into somebody that you don't want to run into. Small
Small
world?
world.
It's a small world. Yeah, it is. So I ran into this person way back when I was going to be given an award for a distinguished lecturer in continuing professional education. The State Society was giving out an award. And they were giving it to three distinguished lecturers, of which I was included in the group. I don't know why, but I was included in the group. Fine. So when I got to the awards ceremony and they were going to take a picture of the three of us, who do you think was standing right next to me? The guy who did the business valuation. I said, hi. He says, you know, your client didn't pay my invoice. I'm going to sue them. Now, is that something that should have been brought up at an awards ceremony, or should it not have been? Well, I
Should
congratulate him.
not.
Should not. I congratulated him. He should have congratulated me. But he says he's going to sue my client. But he did business valuations. The bottom line was he didn't sue, and the client did not pay the invoice because it was absolutely worthless. But if all you do is business valuation services, fine. You don't have to have quality management in effect. If all you do is litigation support, what does that mean? You serve as an expert witness at trials. You don't have to have quality management in place. Now, I remember when I was lecturing for the Foundation for Accounting Education at the State Society many years ago, somebody came up to me after class and says, you seem to have a pretty good working knowledge of the SASs, the Statements on Auditing Standards. I said, thank you very much. He says, I could use your services because he, that person who contacted me, saw me, said that he serves as an expert witness and sometimes he needs assistance for backup. He said, I could use your services. So here's my card. If you're interested, call me. Do you think I called him? Give you a hint. The answer has two letters in it, and it's not ya.
No.
No.
No. I said to myself, you know, if they called upon to testify and you get up on the stand, you know that the defense attorney is going to try to rip you to shreds. I said, I don't need that kind of stress. I'm already a multi-billionaire. Yeah, right. I said, I don't need that kind of stress. I'm not interested. So I decided not to serve as an expert witness. But if that's what I did, and that's only what I did, I don't have to have quality management in place. But we'll go under the presumption that you're a CPA firm that has to have quality management in place. And there are certain elements or components that must be included. The first one has to do with the firm's risk assessment process. So every CPA firm has to decide what kind of risk are they taking in performing certain engagements. And of course, the risk that you're taking is a matter of, take a guess. What do they say that stands for?
Professional judgment.
Good, professional judgment. And I'm going to use that phrase a lot during the course. I may not go like this. I may vary it. I may go like this. What do I want you to yell out?
Professional judgment.
Good. I may go like this. Professional judgment. But it's so important because all the decisions we make are based on professional judgment. So how you assess the risk that you're taking is a matter of professional judgment. What level of risk you do take is a matter of professional judgment. The second component of quality management deals with governance and leadership in the CPA firm. This all has to do with the CPA firm. It really has nothing to do with the client. So it has to do with the organizational structure and the assignment of roles and responsibilities. There should be a chain of command in the CPA firm. And here it could be based on an organization chart, and we are concerned with the tone at the top. The tone at the top, doesn't it sound like it's a musical concept? The tone. The tone at the top tells us that the CPA firm's leaders, the people who are running the CPA firm, should not be concerned primarily with the monetary rewards of performing services, but they should be more concerned about the quality of work that they are performing. So they need to do a proper job, not be concerned primarily about the money. Even though between us, what is the CPA most interested in?
Money.
Money, exactly. Otherwise, why would we be doing this work? The third component says that a system of quality management has to take into account relevant ethical requirements. And we have to take into account that there may be different codes of conduct which specify ethical requirements. And we're going to have to decide which code of conduct we follow primarily, but we'll get to that in a later class. Now, just as an example where we have to consider relevant ethical requirements, the big one is called independence. It'll turn out that you need to have independence in fact and independence in appearance. Independence in fact means that in reality you are independent of the client, that you have avoided certain situations where you would breach or destroy your independence. You have to be in a position where you can think objectively and perform your work with an unbiased mental attitude. And we'll go through a list of things that could destroy our independence when we get to the code of conduct. And those are the things that you have to avoid. If we're talking about independence and appearance, that's the image that we project to the public. We have to look as though we are independent. Now, it's not as though you need independence in fact or independence in appearance. You need to have both independence in fact and independence in appearance. And the reason we need that is to inspire confidence in the profession. But we'll get to the various situations. But I'll give you an example. Question. Do you think it would be ethically acceptable to own stock in a client that you're auditing?
No.
No.
You
No,
definitely
never.
never. You would have lost your independence in fact for sure. But you have to have both independence in fact and independence in appearance. Let's see. Do you think it would be acceptable to be involved in a hot love affair with the president of the company?
No.
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 You would definitely lack independence in fact. Do you think it would be acceptable to be involved in a hot love affair with the spouse of the president of the company?
No.
I have one friend.
I heard I have one friend. Who said that? Nobody's answering.
I think it wouldn't be such a problem since the husband is not working there. I think it's the husband.
So you say it's okay to have somebody's microphone is on. I hear noise. So you're telling me that it's okay to have a hot love affair with the spouse of the president of the company? Could you actually think clearly, objectively, if you're involved in this love affair and, if it comes out, there could be a problem? What do you
Oh,
think?
sorry, I didn't hear clearly because of the noise.
Do you think it would be acceptable to be in a hot love affair with the spouse of the president of the company?
No.
Hell no.
I heard an HELL no. You would definitely have lost your independence in appearance, for sure. And probably in fact as well. So the bottom line is you have to have adherence to a code of conduct, which again, we will get to in detail. The fourth of the components has to do with acceptance and continuance of client relationships and specific engagements which involve the firm's professional judgment. Yada, 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 yada. It goes on and on and on. Question. How many people went into accounting because they are just totally mesmerized by the concept that debits equal credits? Huh? Debits equal credits? What do you think? How many people went into accounting because of that? Not a lot. Not
It's
many.
mostly the money.
Mostly the money. So not that debits and credits have to equal. Do you know who came up with the concept of debits have to equal credits? You're thinking. Well, you're thinking. I'll take a sip of caffeine. There's not much left. Nobody knows. Really? Anybody ever hear of somebody by the name of Luca Pacioli?
No.
No. Well, you're going to be glad you came today because you're going to learn who Luca Pacioli is. He was. Luca Pacioli is the man that I owe my entire career to. Luca Pacioli was a Renaissance monk. So I guess he didn't talk very much, but he did write. He wrote the definitive treatise on debits and credits. Debits have to equal credits. That's the man we owe our entire careers to. Now, he wrote in Latin. I got a copy of his book. I have the English translation. I'd love to have the original in Latin signed by him. Not going to happen. If I did, it would probably be worth millions. But that's the man we owe our careers to, Luca Pacioli. Wow. See, he came up with the concept of debits equal credits. Now, here's a good trivia question for you. I'll give you the easy ones first. What's the abbreviation for debit?
DR.
DR.
DR. What's the abbreviation for credit?
CR.
CR.
DR. Won't you find that interesting that the abbreviation for debit is DR?
Yeah, there's no R in it. It is
There's
interesting.
no R in that. Right. Now you've gone through pretty much 4 years of accounting. Didn't it ever bother you, the DR? Did it come from? Alex, it's been bothering you all these years. It's too bad you didn't know me sooner. You could have asked me and I would have calmed you down. Anybody else ever wonder did they come up with the DR?
I was wondering too.
Yeah, Shane, you were wondering also. Well, you people are lucky because I'm going to tell you. And they never explained that to me in Accounting 101 either. So here's a secret. Don't tell anybody. The DR and the CR come from Latin. The DR is short for Debary. Better put that in a bubble. Debere and Credere. Now, if you take the D, which is the first letter, and the R, which is the next to the last letter, you get the abbreviation DR. If you take the C, which is the first letter in Credere, and you take the R, which is the next to the last letter, you would get the R. So CR. DR and CR come from the Latin debere and credere. Is that cool or what? Why is the phone ringing? Stop. Private call, private line. All right, we understand that? So I don't think you people went into accounting because you're mesmerized by that formula. How many people went into accounting because there was no other major for them to try? I was pre-med for 2.5 years. Upper junior semester, I decided to get out of biology and go into accounting. It's the only thing left for me to try. I had no interest in history. I had no interest in anthropology. It's not as though I dig anthropology. Anybody ever take anthropology?
Yeah,
Yeah,
didn't
I
like
thought
it.
you didn't like it. I thought that was supposed to be one of those goof courses where you get an easy A. No, I had even difficulty getting a C in that. So I wasn't interested in that. What else was I going to try? Music? Well, I wasn't that good in music. Art? Forget about it. I mean, my artistic capabilities is just putting a dot on the middle of the page. So there's nothing left for me to try, so I tried accounting. Fortunately, I loved accounting and I still love accounting 50 years after I graduated from Queens College. So I didn't go into accounting because I loved it at the beginning, but I ended up loving it. How many people went into accounting because they have this need to help other people? Anybody? Nobody has the need to help other people. Just making a note. Hold on. I'm writing, making a note. Students couldn't care less about anybody else other than themselves. All right. Well, I'll tell you that I also went into accounting because I have the deep inner need to help other people. How many people believe that? You could tell me. You can be honest. Don't worry, you won't hurt my feelings. What do you think?
I believe it.
You believe it. Thank you very much. Well, it is true. I have this deep inner need to help other people give me their money. So I didn't really lie. So I went into it also for the money, which is why most people go into it for the money. So let me ask you this. If you're interested in accounting because you're interested in money, should you automatically accept every client that walks through your front door and solicits your services?
No.
No. You have to feel that the client is honest and ethical and that you're going to have a good working relationship with that client if you accept the party as a client. So there have to be policies and procedures in effect for accepting clients. So if you know that the prospective client had been convicted for fraud, financial accounting fraud, maybe payroll protection program fraud, your policies might lead you down the road not to accept that client. But let's say you have a client, you have to have policies and procedures for determining whether to continue the relationship with the client. So if you had difficulty in the prior year's engagement with the client, for example, they refuse to provide what's called a representation letter. Representation letter is really the final step in the audit before you express your opinion. They have to acknowledge in writing that they're responsible for the assertions made during the course of the audit that are either implicitly or explicitly embodied in the financial statements. You did the whole audit already. You just need one more piece of paper signed by the client. We'll talk about it later on in the course. Wherein they acknowledge their responsibility ultimately for the statements and everything underlying those statements. Now, clients, being human beings, sometimes inhuman beings, may not think twice about lying verbally. But when it comes time to lying in print, where they have to sign their name, that they may think twice about. Now, before you accepted or continued a client relationship, you had to convey to them that you expect a signed representation letter. If at the end of the engagement, the client says, well, I was thinking about it, I don't really want to give you that signed rep letter. If that's the case, even though you did the whole audit, all the evidence that you've acquired previously is most likely tainted. It's worthless. If they're not willing to put in writing that they told you the truth and that they're responsible for that information, you got to question their integrity. So at that point, you want to say to them 2 words. What are those 2 words?
No.
Goodbye.
Yes, but I
Ta-ta.
specifically
Ta-ta.
reworded to ta-ta. Exactly. So you have to decide whether to accept or continue the engagement, which of course is really a matter of
Professional judgment.
good professional judgment. Absolutely correct. So that representation letter is mandatory. Absolutely mandatory. You have to get it at the end of the audit. So would that be an unconditional requirement or a presumptively mandatory requirement? Obtaining that letter. Unconditional or presumptively mandatory? If you must, get that letter. Have we fizzled out already?
Unconditional.
Good. It's an unconditional requirement. They won't give it to you. Ta-ta. Now, that representation letter is very different from an engagement letter. We'll talk about an engagement letter a little further down the road, but that's before you perform any service for the client. The AICPA says that you should get a signed engagement letter, which just establishes or documents the understanding reached between you and the prospective client. They say you should get that. So if it should, is that mandatory or is it what they think you really should do, but there may be extenuating circumstances that provide reasonable justification for not getting it? What do you think? If it's should, that means it's a presumptively mandatory requirement, but there may be circumstances where you won't get that letter. Are we good on that component? The whole point of that engagement letter is to minimize the risk of misinterpretation as to the needs and expectations of the client. The 5th of the components of quality management state that engagement performance, which involves how the firm promotes and supports consistent performance of quality engagements, including direction, supervision, review, consultation, and communication. So up to this point, the quality management components really only dealt with running the business, didn't specifically relate to any engagement. This is where it gets a little more specific And we're informed that for whatever service you are performing, whatever engagement you are performing, you have to adhere to professional standards. If it's an audit of a non-issuer, you have to follow SAS's statements on auditing standards. If it's an audit of an issuer, you have to follow auditing standards of the PCAOB. We know you have to follow GAS, generally accepted auditing standards, and even though the list is gone, they still are relevant. Then it says something about SSAE as a set of standards. What's SSAE? Does that stand for send self-addressed envelope? Well, it does in the real world, but for an accountant, that stands for statements on standards for attestation engagements. So if you are performing attestation engagements, you have to follow those SSAEs. SARS, SSARS, not SARS. That would be severe acute respiratory syndrome, something you don't want to get involved with. But SSARS stands for Statements on Standards for Accounting and Review Services. They technically, I mean, in my mind, should do away with that and rename it because it's not just accounting and review. Remember we spoke about the lower levels of service, but no, an audit. We said compilation, review, but there's also preparation of financial statements. That would be falling into this category as well. So there have to be policies and procedures in effect to reasonably ensure that engagements are performed properly. So just as an example, you might be interested in sending your employees to CPE courses. You could have in-house training, but they need to be made aware of new pronouncements, and you need to know that they understand those pronouncements and they're in a position to apply them properly. Any questions so far?
No.
Cool. So what I have to do right now is just quickly run down the hall because I need to get more pages out of the binder. Just don't leave. I'll be right back. You can think about your love of auditing. Be right back. I'm back. I didn't run. I walked rather slowly. Okay, so we're on page 10 now, and we're up to item 6, resources which deal with obtaining, developing, using, maintaining, and allocating resources for effective quality management, including intellectual and human resources. Wow, that is definitely a mouthful. So under here, we have concepts that relate to human resources. Human resources is responsible for hiring and what's the opposite? What's the opposite of hiring? Firing individuals. Yes, they have to have policies in effect for hiring and firing. So for example, a hiring policy might be to require that a prospective employee fill out an application and also submit a what? What's the piece of paper that really tells somebody about you?
Resume.
A resume, exactly. How many people have a resume already?
I do.
Cool.
I do.
Now, if you don't have a resume, you're going to have to prepare one. There's no question about it. And you have to have some stuff to put on there, correct? Yeah.
Yes.
Yeah. So if you have work experience, you're definitely going to list that. If you want to put some other stuff on there, you could join the AICPA, you could join the New York State Society of CPAs, you could join the Institute of Management Accountants as a student member, an associate member. And if you can do that, and I think the AICPA is free, the others you probably have to pay. But if you can put that on your resume, it shows the recruiter that you're interested in the field of accounting. So that looks positively in your favor. So put something on that resume which will tell the recruiter that you're worthy of hiring. Now, after you fill out the application and the resume, hopefully you're going to get called for an interview. Now, I think on the campus there is a department that assists you in getting jobs. Is that correct?
Yes.
What's the name of that department? They've changed it over the years. Anybody know what it's called these days?
I think it's called CUNY Inclusive Economy.
Wow, fancy terminology. So
Yeah.
you have to prepare a resume and you have to submit it to them. It used to be, I don't know, you could tell me yes or no, that you had to go to a select number of their meetings about recruitment. Is that still in effect?
Yes,
Yes.
It is.
number of
Cool. So you have to go to their meetings and then they'll ask you for your resume. Now, in terms of the resume, if I were you, when preparing it, I would definitely proofread it. How many times would I proofread it? Would I do it once or more than once?
More than once.
More than one, multiple times.
Yes, multiple times. Not only would I read it multiple times, I'd give it to somebody else to proofread because you could be looking at the document the same way each time and you could easily miss a typo. And studies have shown that if you have one typo, you may get away with it. But if you have two or more typos, they're basically going to think two words. And what are those two words? Ta-ta. So I know that if I have an important document, I will proofread it and then I'll give it to my wife and I'll ask her to proofread it. My wife is an excellent proofreader. She could spot a typo a mile away. She's really good at it. So you should have your resume proofread. You submit the resume. Hopefully you get called for an interview. Now, in the old days, those are gone. They used to hang up a list of people that they want to interview. Now they'll contact you directly, and maybe the initial interview will be virtual. And if they like you in the virtual interview, maybe they'll invite you down for an in-person interview. But they have to have these policies in effect for interviewing. Well, let's say you got called for the interview. Great. If you didn't get called, don't take it personally. Just say to yourself, it's their loss. I'll find the right position for me. Everything always works out for the best. All right. Well, you went through the first interview, we'll say, and you could have different types of interviewers. One could be the type that says, hi, let me tell you about myself, and they brag about themselves. And then with 2 minutes left, they'll say, oh, do you have any questions? That's not the type of recruiter you want. The type of recruiter you want is the one who will say, tell me about yourself, to which you want to reply, what do you want to know? It's everything's on the resume and the application, but you can't say that. Then they'll ask you if you have any questions. Do you think you need to be prepared with questions? Yes or no?
I think yes, like taking notes during the interview itself.
I think absolutely.
Yeah, you better have questions for them. So let me give you some questions. You tell me good or bad questions. How about this? I was reading the Wall Street Journal and I was reading Crane's business report. And I noticed that your firm was sued for malpractice 3 times in the past year for like $300 million that you lost. I'm just curious, is there enough money to pay me my salary? that a good question?
I think no.
You think no? Anybody else think no?
I think no also.
Yeah, it's probably one of the worst questions you could possibly ask. Do not ask a question like that. How about this one? I was researching the firm, and I noticed that you specialize in audits of financial markets. I'm curious, how would my first year responsibilities differ in performing services in the financial markets for non-financial market clients? Is that a good question?
Yes.
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 Yeah, that's a
Yes.
good question. How about this one? I was researching your firm and I noticed that there's a fast track program where I could move up more quickly than most employees do within the firm. How could I qualify for that program since I am a highly motivated individual? Is that a good question?
Yes.
Yeah,
Yes.
that's definitely a good question. So come prepared with questions. Now, there are books out there that you can read that'll list like 8 million questions. Can you memorize all those questions? No, but you have to be prepared to answer questions in general and questions about the firm. All right, so you got the interview. They say, thank you for coming. It's a pleasure meeting with you, and we'll be in touch. We'll get back to you. Now, you sit there waiting patiently for a response. They'll probably text you at this point or send you an email. And one of the two emails could be, it was a pleasure meeting with you. We were very impressed with you. However, now the letter can stop right there because the minute you see that nasty word, however, what do you think? You're out of there. So they'll say, however, we've met our quota, but we'll keep your resume on file. They don't mean on file, they mean in the file, the circular file, the garbage can. So forget about it. Move on to the next firm. The other letter could say, it was very nice meeting with you the other day, and we're very impressed with your credentials and your communication skills, and we would welcome the opportunity to meet with you in person for a follow-up interview. Is that the kind of response you're interested in?
Yes. Yes.
That's
Yes.
what you... Perfect. So we will talk about that follow-up interview in our next class because time is technically expired. So I'll tell you that our next class is when? Monday? Is that right? Monday the 9th? No, is that right? Yeah, well, time flies. Monday the 9th. So I'll tell you to all stay safe, stay warm, be careful out there. And how do we close each class?
Ta-ta.
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 Ta-ta. So ta-ta.
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 Ta-ta.